Hey there, YouTube community. Welcome back to another exciting video. Today, we're diving into the world of investment banking, a crucial pillar of the financial industry. So grab your notepads, because we're about to break down what investment banking is all about. If you're curious about finance and looking to understand the inner workings of investment banking, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell to stay updated on all things finance. Defining investment banking. Alright, let's start by defining investment banking. At its core, investment banking is a financial service that bridges the gap between companies seeking capital and investors looking to deploy their funds for potential returns. Investment banks facilitate capital raising, mergers and acquisitions, and various financial transactions that drive economic growth. The role of investment banks. Now, let's talk about the key roles investment banks play. Voiceover: investment banks provide financial advisory services to companies, helping them strategize mergers, acquisitions, and capital structuring. They also underwrite securities and help clients issue stocks and bonds to raise funds. Additionally, investment banks manage IPOs, initial public offerings, enabling private companies to go public and list their shares on stock exchanges. The investment banking process. So, how does it all work? Let's break down the investment banking process. Step 1. Companies approach investment banks for financial advice or capital raising solutions. Investment bankers analyze the company's financials, market trends, and strategic goals. Step 2. Investment bankers structure deals, whether it's an IPO, debt issuance, or merger. They also create the necessary documentation and pitch to potential investors. Step 3. Investment banks help connect companies with potential investors and negotiate terms. They play a critical role in pricing the securities to attract buyers while ensuring fair value. Step 4. Once investors express interest, the investment bank facilitates the issuance or sale of securities. This involves due diligence, regulatory compliance, and coordination among various parties. Step 5. After the securities are sold, investment banks may provide ongoing support, market insights, and research to clients and investors. Advantages of investment banking. Investment banking offers several advantages. Firstly, it enables companies to access capital quickly and efficiently. Secondly, investment banks provide expertise and strategic guidance, helping businesses make informed financial decisions. Challenges and regulations. Of course, there are challenges and regulations. Investment banks must navigate complex regulations to ensure compliance with financial laws and market standards. Additionally, conflicts of interest can arise, especially when investment banks advise multiple parties in the same deal. As the global economy evolves, investment banking continues to adapt. The rise of technology, changing investor behaviors, and shifting market dynamics present both opportunities and challenges for investment banks. And that wraps up our comprehensive dive into investment banking, the backbone of financial markets. I hope you've gained valuable insights into how investment banks operate and the pivotal role they play in shaping our economic landscape. If you found this video informative, don't forget to give it a thumbs up, share it with fellow finance enthusiasts, and leave your thoughts in the comments below. Until next time, keep exploring the fascinating world of finance.